Welcome to another edition of Expert Talks by Kalkine TV. I'm Sage. Great to have your company for today's show. And today's guest is Brendan Playford. He is the founder of Masa Finance. The future of money and banking has come into the spotlight, with 2021 being touted for some as the DeFi summer, with the technology potentially offering more liquidity and efficiency over the traditional banking system. Even Australia's ANZ Bank has developed their own stablecoin, and Commonwealth Bank opened crypto trading on their exchange platform. This year, stablecoins, in particular of the algorithmic variety, which are not pegged directly to an underlying asset such as the US dollar or gold and are used in decentralized finance, are under the regulators' radars in order to mitigate risks associated with the technology. For some background, Masa Finance is a decentralized financial data platform that allows you to own and share your financial data with a single click, and other DeFi banking products. Well, here to tell us more about this innovative platform is the founder of Masa Finance himself, Brendan Playford. Welcome to the show, Brendan.
Hi Sage, how are you doing?
I'm great. Thank you so much for being available. We're really keen to hear your insights. Brendan, could we please start with finding out a little bit more about what you do at Masa and what the mission is at Masa Finance?
Yeah, it's a really good question, and thank you so much for having me on as well. So at Masa, we have a vision for building a decentralized infrastructure and being the world's first essentially decentralized credit bureau. So as you sort of mentioned, that's enabling people to move their kind of credit history on-chain into this new world of decentralized finance. And with Masa, people can create a credit identity and then access normal credit products through DeFi. This allows data ownership and the connecting of the traditional financial world with the new world of DeFi to bring traditional lending into decentralized finance. I'm happy to kind of share more information and dive in more.
Great, that sounds really exciting, because I think there's great potential in how DeFi loans can offer liquidity to investors. So DeFi loans, they're an interesting innovation, and we'd love to find out more about it. How can users benefit from accessing loans through Masa Finance, for example?
Yeah, so what we've seen over the last, I think, 3 or 4 years in DeFi is the introduction of collateralized loan products through platforms like Aave, MakerDAO, and other protocols that allow you to escrow Bitcoin and then take out a loan that's a fraction of that position. That's kind of gained general adoption in the DeFi space, and it allows a provider of capital to give a USD allocation to a pool of borrowers who are escrowing assets. And if they don't pay, those Bitcoin assets are liquidated to pay off the loan, or if the market kind of goes down, once again, their kind of assets are liquidated. And that doesn't really allow for mass adoption. And the missing piece from DeFi protocols is a way of measuring and assessing risk that mimics and copies the traditional banking system. So we have this amazing new world of DeFi that reduces friction with the flow of capital, increases capital efficiency, and brings in new sources of capital to lend to people. But there's this missing piece in the middle between the borrower and the capital that assesses risk. And the way it's done today is using collateral. We believe the way it's going to be done in the future replicates and pattern matches with the existing lending paradigm. So we're building a new decentralized lending infrastructure that allows for a new way of lending to be conducted in DeFi to connect with these new capital sources within a known risk framework that reflects and replicates what lenders have used for years in traditional finance.
Wow, that sounds really interesting. So in regards to DeFi protocols, I think in the past that they've not needed to have know your customer for people getting involved, and that's one of the new things that's becoming more prominent in certain parts of it. Could you explain to us a little bit more about identity issues and KYC for DeFi protocols and how it affects uncollateralized loans in more detail?
Yeah, absolutely. So you can see in a world where in DeFi you have maybe an Ethereum wallet as your identity. So anyone can go into Uniswap or Aave or one of these other protocols. They don't have to reveal their identity. All they have to do is have assets in their wallet. They can escrow those assets and get a USDC, like a dollar-backed stablecoin, into their wallet. And that's great for this particular use case. Now, if, for example, Sage, I wanted to lend money to you through DeFi, and you just provided me your wallet as your identity, and you took the money and you sort of defaulted and ran away with it. You kind of absconded with the loan and didn't repay it back. There's not really a position or a place to, there's not a way to collect that from you. So the current system works for collateralized loans because we're holding some of your collateral to be able to secure your repayment. Now, in order to unlock a more traditional lending use case where you're going to come onto a platform, you're going to provide some form of identity or verification that in the event that you don't repay, I, as the person giving you the money, can come and collect it. So with our protocol, when you register as a user on our protocol, you provide personal information, which you can think of as KYC. We anonymize that and we sort of put it into a locker. You can think of it as a box that contains all of your information. And when you apply for a loan, that box isn't opened, but the lender knows the risk of the information contained within there. So we show them the outcome of the data, but we don't reveal necessarily your identity. Now, the lender goes on to lend to you, you're KYC'd and verified, but you don't have to reveal your identity. If at the end of the loan you default, the box that you've permissioned would then open, so as the lender could come and collect in the event of default. So we're trying to create this hybrid world where we don't provide like full visibility of the user. We verify that you are Sage and I'm Brendan, and allow you to access a loan through this sort of more anonymous, ownerless structure, peer-to-peer way. When if you're a bad actor, you're then revealed to the lender, not everybody around you, so as they can collect. So this is our particular approach to this problem, and in doing so, you allow for the pseudonymous nature of blockchain to continue philosophically, but you also allow for the scaling of a mainstream use case on blockchain, which is providing loans to anyone through this new protocol.
Wow, that sounds really interesting. So in a sense, there's a lot more responsibility put on to the borrower, in that case, to maintain their side of the agreement, which is really good. Thank you for explaining that in so much detail for us. Now, could you also fill us in a little bit about what people can gain from Backstop liquidity providers and what the minimum requirements are to sign up for that?
Yeah, so we've looked at what is the typical kind of lending flow in the real world, and you have several steps. You have an individual who's looking for finance. You have a credit bureau that owns their information. So what we're doing, we're inverting that paradigm by making the individual their own credit bureau. They link different data sources. They can link a credit score from TransUnion or Equifax or Experian. They can link bank information. They can link crypto transactions that they have on centralized exchanges to build this like Masa identity. And then with that, they can apply for a loan. Now, in the event of defaulting through the protocol, we are looking to implement this notion of, it's something that FTX do really well, which is where someone defaults, you essentially package the loan up, and that can be thought of like a collateralized debt obligation or a credit default swap. And you can essentially sell the non-performing debt or the performing debt outside of the people financing it, so that you can actually scale these products. So we're not actively signing up any backstop liquidity providers, but these are people that they're professional organizations that essentially handle debt in different ways once it's been issued. So as if I'm lending to you, I can essentially sell off my loan book, attract more capital in by bundling these loans up and selling them off to backstop liquidity providers.
Wow, that is really innovative. So that means that people are actually making money or some form of liquidity from their credit profiles. Have I understood correctly?
Yeah, and it's also the fact that today, in order to assess the risk of a lender, so if for example I'm lending to users on our protocol, our lender. As users come in, they create this credit identity, like I said, the equivalent of this credit bureau on chain. They share their information with me and I can make a lending decision. Once that loan has been issued, it's stored and tokenized on chain, and all of the data that I use to make the decision on the loan is encapsulated within that tokenized representation of the loan. If I take 100 of those loans, I've lent to 100 people, I can sort of repackage those and sell those off to a funder or a bank or a professional fund that invests in those kind of things. And they then hold the risk and they can see the risk associated with that package of loans. This sort of is essentially avoiding what we saw in 2008, where CDOs were sold and the actual risk of those CDOs within a collateralized debt obligation was not known. We allow anyone owning the debt that they've lent out to understand the risk of it at any point in time.
That's really, really interesting. Sounds like there's a lot of potential there with mortgages and even rental platforms. So is that where your CORN token comes into it, CORN? Is that the token that you use?
Yeah, we are primarily, all of the transactions on the platform occur with a USD backed stablecoin. So we're partnered with a platform called Celo. Celo is a blockchain that is really great for low transaction times, low transaction fees, and we also use Ethereum. And within this protocol, we have to have a way of transferring the data privately between parties. So because blockchain is completely open and transparent, any data that you're sending through the platform is visible by everyone. So if I was to send a message to you through Ethereum, it wouldn't just be you and I that saw that message. Everybody else could see that message as well. Everyone else can see the transaction I make to you. Now, in our world, we don't want anyone to see the data that you're sharing with me, the lender, or the data that's being shared with the person underwriting my debt facility as the lender. So we have a proof of stake blockchain that is secured using our own token, a little bit like, you can think of it like Solana or Ethereum's proof of stake. And that layer that we've built allows for data to be shared with multi-parties and for the data to remain private at all times other than between those two parties. So we use our token to secure that network. And the people that do the security, the nodes or the entities on that blockchain that maintain the security, get rewarded in this token in the same way that miners mine Bitcoin, in the same way that miners mine Ethereum, in the same way that proof of stake validators verify transactions on something like Solana or Avalanche, for example. So it's used to secure the network.
That's great. Thank you for explaining that. And best of luck moving forward with that, because I know it's such a process these days, even just going for a rental, putting in the application and getting that verification across to the person you're renting from that you're going to pay it, you're going to pay for what you are having or what the service is that they're offering. So Brendan, sounds like there's a lot of potential there. What are the near-term goals for Masa Finance?
Yeah, so like you said, our belief is, and we're on a mission to sort of bring the first billion people to DeFi. We believe that the easiest way to do that is by giving people the opportunity to access fairer credit in a fair credit system where it's open and transparent. Through my life, coming from the UK to the US and coming from a very disadvantaged background, credit's always been difficult to obtain or difficult to understand. I've had to work to understand it. And part of what I'm building with this platform is to make this infrastructure available to everyone. And use cases like you highlight, which is, verification for a rental agreement is done with a credit bureau. And you can see that there's this new world where rather than having it go through a credit bureau, I can simply share that with you, the landlord. You're able to verify my creditworthiness, my affordability. But our first use case is lending. So we're going live over the next few weeks with our first lender, who's actually using our platform to originate loans in an off-chain world. So using the infrastructure to offer loans to traditional lending business and scaling that up over the next sort of 5 or 6 months, focusing on onboarding more lenders who may be offering car financing or mortgages, personal loans, business loans. and then looking at other ways in which we could do things like identity verification for rental agreements, identity verification for accessing certain products or services which normally a credit bureau would do. You often forget the amount of times your credit report is queried by an institution if you're not getting credit. It's often used as that sort of verifier of like where you live, what you do, what your affordability is, and we expect to see the same kind of use cases coming out of that. And our near-term goals are going to market with our first lenders, launching the protocol and token, and generating liquidity for funders or liquidity providers on the back end and returns for those investors.
I think that would definitely support the amount of institutional investment that has been flowing into crypto over the last 12 months, just the efficiency and how it can have the potential to streamline so many existing processes. Thank you, Brendan. You've really helped to clear up some of the fuzzy areas of my understanding of DeFi. Thank you very much for your valuable insights.
Thanks, Sage. Have a wonderful day.
You too. If you've just joined us, we had an informative discussion with founder of Masa Finance, Brendan Playford himself. For the full interview, please head to Kalkine Media's YouTube channel and keep watching Kalkine TV for more live expert talks and market updates. Till the next episode, stay apprised and invest wise with Kalkine Media.